Analyze what the stock market did today, Wednesday, February 23, 2022. This is a daily chart of the S&P 500. Big sell-off today. It was down 79 points, which is equivalent to 1.84%. Early in the morning, gapped higher and spent some time, less than half an hour, trading between 43.30 and 43.40, and dip lower after that pretty much all day with a minor bounce in between. If you look at an intraday chart, you'll probably see, or you will see something like this, gapped up around here, spend some time here, dip, bounce, and then sold off, closing near the low of the day, which is very strong support around 42.25, which is a low from last month, 4 weeks ago. So would you expect a bounce there? Sure, why not? After a big sell-off, it would be reasonable to make that assumption. However, of course, you always follow the price action. But so far, it looks like a bounce. Of course, this happened at the end of the day. We'll see what happens tomorrow. Definitely this level that I'll be watching tomorrow between the low today, 42.21 and 42.40. That's about a 20 point trading range. If we open much higher tomorrow, I will consider buying also, and my stop will be placed below today's low. First big resistance, strong resistance that I see up here will be around 43, just below 4,300. The 5-day moving average is far away, so if I get a good entry around here, this level, if we open lower, pushes above that, that would be a good entry level. If we open higher, like I said, I'll be looking for the gap to hold, and I will go long with the stop below today's low. That is my plan for tomorrow, but since we close near the lows of the day, chances are we'll probably open lower. If we open higher, that would be very bullish, and if the gap holds, definitely could be a nice bounce higher. But one more thing that I forgot to mention, the next support that I see is around 41.75, so which is about 50 points lower than today's low. Now let's take a look at the Nasdaq 100. This one, same as the S&P 500, has retraced too much, too fast. So expect any bounce now. This one closed at the low of the day. So probabilities favor. We're going to open lower. Support level that I see below today's low is around 43,400. Uh, just remember that we have sold off so much, has so much momentum that those pivot points become less significant, and it can just randomly just pick a number and bounce from there. I am glad I did not buy yesterday. If you remember, I said that there was a good potential that it could have been the bottom, but I just didn't like the intraday price pattern, so I did not buy. Wanted to wait until today, either further confirmation or lower. Well, it opened higher around 14,000, and that was a level we had been watching for the last two trading sessions, the pivot point, and it couldn't get above that level, so it gave me no reason to buy. After that, it dipped, minor bounce, and just sold off the rest of the day. I'll be watching it very closely tomorrow for any signs of a reversal or a bounce confirmation, so I can go long via TQQQ ETF. Levels that I'll be watching closely tomorrow, if we gap higher, will be today's low and this pivot point around 13,724, which was the low from last month and yesterday. Let's now take a look at the Dow Jones Industrial Average. For this chart, I had to zoom out. It dipped below very strong support, which was a pivot point from back in June, the 33.3K pivot point. It is now around this level for this pivot point. Some support around 33,000, dips below that. I don't really see much until around 32,000. But this chart, the Dow Jones Industrial Average, is the most conservative, most defensive index of the market, and now is dipping below multi-month pivot points or that range from a few months ago. So this chart is just not looking good. Just as ugly as the other indices now. Philadelphia Semiconductor Index thought it could actually stay above this level, the 23-24 pivot point or this zone. I did it here, and the last trading sessions, but today it dipped below that. So now below these moving averages, way below these moving averages, now declining. So the chances of this one moving higher are very low. Path of least resistance is down. So this one, just like the other indices, it's just not looking good. If we see a bounce, even if we get a bounce around 3250, I don't think I will play this index. I would much rather buy the S&P 500 or the Nasdaq 100, just because this one trades very choppy. I don't know if you remember when I bought it. Where did I buy? I bought it this day, and I got stopped out for a loss around this area, I think. I just do a much better job trading the other indices, like the Nasdaq 100 or the S&P 500. And now the Russell 2000 Small Caps IWM ETF. This one got worse, had a chance to push back above 199, above this trading range, but it couldn't. Got really close to that today. The high was 198.9. It dropped from that area and closed way below that, down 3.6 points or 1.87%. This one is just not looking good. It joined the other indices. The path of least resistance is down. Just one observation, this one has the biggest bounce, or the best bounce versus the other indices from last month. Was able to go from here to here, but this is classic technical analysis. This had been support for the last few months, for months and months, and that resistance, or that support, that support became our resistance, which happened here. And look at the size of that candle that day. That was classic technical analysis. Now it's below all these moving averages, below these pivot points, so the path of least resistance is south. I think we'll see this zone before a bounce, but I don't predict. I play a session by session. So thanks for stopping by, and remember to follow your plan and have a plan for the day. My plan is not to short. My plan is to play a bounce.